listener production.
Hi, Natarsha Belling with you and welcome to the afternoon edition of The Briefing. Coming up in our deep dive, the stock market bloodbath, how the fallout from Donald Trump's tariffs has sent the world into a financial meltdown. We're joined by Economist Nicki Hutley, who will unpack the winners and losers from this rollercoaster ride. But first, let's check the headlines this Monday, the 7th of April. The Federal Treasurer has flagged Australia could see at least 4 interest rate cuts this year as the fallout continues from Mr. Trump's tariffs. $160 billion was wiped off the ASX this morning, with markets around the world also continuing to bleed billions as countries like China react with the new trade war. Just weeks out from a federal election, the Treasurer claims Australia is well placed and well prepared for the continued global uncertainty. Jim Chalmers saying the market is now predicting a number of cuts to our official cash rate starting next month.
Here in Australia, I don't predict or preempt those decisions, but the market is certainly now expecting multiple interest rate cuts over the course of the year beginning in May.
The Aussie dollar collapsed to COVID levels, with key banking, mining and energy stocks also down this morning. China was one of the first countries to impose reciprocal tariffs on the US late last week. And on opening today, Asia's major stock markets plunged, with British bank giants some of the biggest losers. Fears are now increasing of a major economic slowdown. JP Morgan now sees a 60% chance of a US and global recession. US President Donald Trump has defended the tariff, saying sometimes you have to take medicine to fix something.
Now we have hundreds of billions of dollars is pouring into our country on a monthly basis. It's pouring. It's already started because they put tariffs on. And eventually it's going to straighten out and our country will be solid and strong again.
Now it's time to get into our deep dive with economist Nicki Hutley on today's economic bloodbath. Nicki agrees a number of interest rate cuts could be on the way, but warns it's certainly not all good news, especially for job security and our super funds. Nicki, thanks so much for joining us. They're referring to this morning's share market bloodbath as Black Monday. Would you say that's a quite fair analogy to what we saw happen this morning?
Yes, look, it's pretty ominous, isn't it? Especially if you're about to retire. It's not a happy set of numbers, deep debt cuts. But look, the market's in a panic. And even just what we've seen today, 6% down on the opening, but some of those losses pared back. We're now down just around 4%. I mean, just 4, it's obviously not just, but there is a sense that maybe things have gone a little bit too far. So let's not all panic, just alert, not alarmed, perhaps.
$160 billion wiped off the Australian Stock Exchange this morning. Was it predicted to be this bad? Because it is a couple of days since Donald Trump introduced these tariffs.
I think the thing that's triggered this latest fall has been the retaliation from China. And that's, was totally to be expected. And I think that's the thing with all of this that we've seen in the market since the announcement, was that for some reason, stock markets particularly, but financial markets more generally, seem to think that he wasn't going to do what he said he was going to do, or that wouldn't be perhaps as crazy as what he's ended up doing. And so when he actually did what he said he was going to do, markets went, oh gosh, we got that wrong. And voomp, the bottom's fallen out. Because of course now, economists everywhere are all falling over ourselves to see who can predict the biggest recession in the US in the year ahead, whereas, literally a week ago, things were looking relatively okay for the economy.
Nicki, great point you make there. There are sincere and very serious predictions of a massive recession about to hit the US. Do you think that is correct? And tell us how that is being caused right now. It's because basically the American people will have to pay more for their goods and services, correct?
That's right. So Yale University's done some modelling, just put that out, which shows that the average American household will be somewhere close to around just over $3,500 worse off this year alone. GDP will be permanently 0.6 percentage points lower, so over the long term, higher than that in the short term, over 1%. So, that tips them into recession. So we're talking about maybe contraction of 1%, 1.5% in the second half of this year. So, not as drastic as certainly as what we've seen during COVID, but not something that you'd want to see. And I should add that modelling was done before China's retaliation. So those numbers will be lower still. So, it is not a rosy outlook. American households will have to, pull in their belts. And they've already just come off the back of a lot, this cost of living crisis, which has been just as real over in the US as it has been here. So, this is particularly hard for the US consumer.
So can you explain that, Nicki? Because Mr. Trump's whole analogy of, putting these tariffs in place was to protect American jobs, to protect American industry, to put America first. But if your analogy is correct, it's actually going to be worse for Americans.
Yeah, so the president's analysis, if you can call it that, starts with the position that trade deficits aren't fair. Now, that shows a total lack of understanding of why trade exists in the first place. We buy things from China because they make them much cheaper than we can possibly do in Australia. We used to make cars in this country, and it used to cost, with subsidies, we used to pay $10,000, $20,000 more for a car in this country because of that protectionism, because of those tariff barriers. That's essentially what they do. If you say, I'm going to put tariffs on and assume that all that productivity in manufacturing is coming back onshore in America, that it will create new jobs, in theory, great. But the reason America doesn't produce those things today is because it can't do it as cheaply as other countries. America does lots of other things. They have a trade surplus in the services sector, for example, which conveniently has been moved to the side. So it's not like, even if you take something as simple as beef, right, and putting barriers for Australian beef, you can't just suddenly grow herds of cows. In fact, US cattle herds are the lowest they've been in 50 or 60 years, I believe. You can't just, grow that overnight. And if you think about actual manufacturing, things like cars or machinery, aluminium, you have to have not only the capacity to do that, but if that could be expanded. But even if you have that capacity to invest to build new capacity, takes huge amounts of time and money. And you've got to have confidence that these policies are going to stay in place. So it's not like you can flick a switch and say, all right, America, let's go produce all these things. And even if you do that and could do that relatively quickly, it's going to cost Americans more. That's why they're not producing them at the moment, because if they could do it more cheaply, better, they'd already be doing it.
Talking about what the Federal Treasurer announced today, he held a news conference just after lunchtime today. Be very mindful, all of us are, that we're in the middle of a federal election campaign. So it's very, very strategic messaging from the Treasurer. He came out and said he expects, and he's obviously not the Reserve Bank governor or has any influence on the RBA, but he came out and said that he expects there to be 4 official cuts to the cash rate this year. Do you think that is possible?
Oh, absolutely. Even sort of before what we've seen today, after last week's announcements, the market had shifted from just one potential more interest rate cut to another 3. In this morning now, the expectation is that we'll have 3 back-to-back from next month's May's RBA board meeting. Even talk of not just 25 basis points, but possibly 35 just to get it back to even, or even 50 basis points. So everybody is deeply concerned. Even though Australia is not necessarily in as much of the firing line, there are flow-on impacts. Just the fact that, the markets are falling so much, that affects consumer confidence. It affects people's ability to retire and retirement incomes. You don't have to be directly in the tariff firing line, although we are, for those flow-on effects to have a big impact.
You make a great point there, Nicki, about flow-on effects, right? Our biggest trading partner is, of course, China. So front and centre, we need to be very, very concerned or keep a close eye on what is happening with the relationship, ongoing trading partner between the US and China.
Yeah, look, I think everybody now is saying that we are moving towards a new global order, economically speaking. There will be new alliances, and this relates to geopolitics as it does to geoeconomics. Australia has been focused on trading partners in the Southeast Asian region for a long time now. We will focus on that more, as we did when China put all sorts of trading barriers up a few years ago, we were quite good at diversifying, or at least of using third markets as a way of entering into China. Now, you can't do that with the US, because if you try and, for example, send things to Vietnam and then get them into China, Vietnam's got even higher tariffs than China does. So if it doesn't work for the US, but if we can find other ways to diversify to really fast-growing regions like India, for example, there's a chance. But these things, again, take a huge amount of time. We obviously have to be careful about the sort of political implications of a country like China, who, whilst relations have improved, we're not best friends in the way we might have once been with the US. So, we are living in interesting times. They're fluid, and this isn't going to sort itself out overnight, I think is the main point.
We are certainly, Nicki, living in interesting times. Now, the Treasurer again said that Australia was well placed compared to other countries across the world right now as this economic fallout continues. Do you think we are well placed right now, or do you think these events that no one can see coming will continue to unfold and will continue to affect our very fragile local economy here in Australia?
Look, I think there's no doubt it will affect our economy. And our economy, you're right, is very fragile. We're only just coming out of a very prolonged period of weakness. GDP per capita got back in the black, as it were, in the final quarter of last year. It grew by a whopping 0.1 percentage points after almost 2 years of going backwards. Per capita spending is still going backwards. We are very weak. What we can do, though, is we aren't in the front line. Obviously, tariffs aren't great, even 10%. But our trading partners are, and that will affect us. The big fall in the Australian dollar is part of that readjustment that helps us to adjust to some of those things, but it can't magically solve all our problems. But we do have fiscal and monetary policy, there to help. Unfortunately, the budget is not in balance anymore, but neither is it a whopping deficit that we've got. So there are things that the fiscal policy can do, that the government can do to help with spending initiatives. There are things, obviously, that the Reserve Bank can do with monetary policy to lower interest rates. So, we have weapons at our disposal, if you like, to help mitigate some of the worst effects. But the question is, how volatile is this? How much longer does it go on for? What's the tit for tat? We haven't seen what retaliation from countries, what Europe going to do, Japan. So that lack of clarity, that lack of certainty it's the enemy of investment. Investment is absolutely vital to growth, to productivity that we need to sustain growth in Australia. So I think we're in for another very difficult year. It is interesting times, and I'm quite sick of living in interesting times. I want it to go back to being boring.
You say that incredibly well, Nicki. If finally, I just want to ask you a question about, depending on who you are, your financial situation, your age, these tariffs and economic fallout affect every Australian very, very, very differently. For example, if you're a retiree about to get your super, massive hit. If you've got a mortgage and you've got 4 interest rate cuts, this is great news. So can you just unpack how this is going to affect each Australian right now?
So you're absolutely right. Retirees are about to be retirees will be feeling this terribly. Some people may be less sympathetic and say, well, they've had it good for a few years with good returns from equity markets and higher interest rates, whereas younger, more vulnerable households, have been struggling with mortgage payments. So they will look forward to those lower interest rates. But don't forget, lower interest rates are always there because the economy is weakening.
Yes.
Now, at the moment, unemployment is only expected to rise a modicum from currently around 4% to 4.25%. If the economy slows more markedly, then that could be many more job losses. And particularly if companies are sitting there going, I'm not sure what I'm going to do. I don't want to invest. And that means I don't want to invest in either capital, equipment, or more labour, more employment. Then that's going to put the brakes on the labour market side of things. So we've just got to be careful what we wish for. Economics is all about trade-offs. And when one side's doing okay, it means something else is happening. And we're far from a sweet spot here.
Yeah, well said, Nikki. Strap yourself in. The roller coaster ride continues. Thanks for joining us.
Thanks for having me.
That was Economist Nicki Hutley. And that's it for this episode of the afternoon edition of The Briefing. We'd love you to subscribe or follow us so you don't miss our episodes or our deep dive of the day. You can also follow us on our socials, on Instagram at The Briefing Podcast, and on TikTok and YouTube. Just search Listener Newsroom, which is spelled LISTNR. And we'll be back in your feed tomorrow morning at 6 a.m. I'm Natarsha Belling. Thanks for your company. See you tomorrow.